Hello, friends. What's up, Landy? How are you today?
Doing well, doing well. It's good to see you this morning for me out here on the West Coast, Mr. Peace Love. And great to be back. We've got some things to get into today. How have you been?
I've been doing well, man. I'm riding the wave. I'm feeling pretty good about where the market is. I think we're having a nice little reaccumulation phase, maybe for some of our tokens. Not financial advice, but feeling good about where things are headed. I think there's a lot of really great stuff going on in our ecosystem. SBTC launching next week, the new WASM developments and that stuff. All of the different projects that are launching cool stuff right now. Rosar just presented a SIP. We got the StacksPay SIP proposed. All sorts of great stuff going on. So I'm feeling great, man. I really feel good. I know You're down with the sick kid, man, and that sucks. And I'm sorry for that.
Yeah, it happens. They go out into the world and they bring home everything with them, including horrible illnesses. But he's on the mend. I am, however, probably getting exactly what he has. So we'll see how well I can maintain over the rest of this week. Did have a Spaces event that I normally host on Mondays that I had to cancel yesterday, but managed to get the TA video out and do a few guest speaker roles on some of the regular shows in the various ecosystems. So, this is, just kind of how things go. Got to roll with the punches. And sickness is always the punch that you have no choice but to roll with. So,
right. Nothing you can do. Just get better.
Yep.
Better. Yeah, that's and we just roll with it. We take it as it comes. I actually had to postpone my first show since I started broadcasting stuff. This was the first time I actually had to cancel something. I had to cancel the AI show this morning. We actually kicked it out to Thursday. But
oh, really?
But it was because I had a committee meeting I thought was at 11 o'clock. But was actually at 10 o'clock. And the reason I thought it was at 11 o'clock, I actually found out during the meeting, was because our GAD, our government affairs director, had actually sent out the invite, but put down that it was from 11 to 12:30 when it was in fact from 11:30. So I got I got a more recent email that he didn't clarify that there was a correction. It just had the new time. So
interesting.
Yeah.
Don't you love that?
Yeah, those GAD guys.
Gotta love it, man. Yeah, we deal with that kind of stuff here on a regular basis, except I just tell them, hey, guess what? You're gonna do the meeting when I say you're gonna do the meeting, but that'll give away what I actually do. So I'm not gonna go any further down that road. I
don't
just
quite have the Landy juice.
Yeah, you can get there though. You can.
I can. I don't know if I want to be there in this medium, but
no,
this in particular medium.
Yeah, no. Let's stick to crypto. I mean, that's actually. I'm at the point now where I'm so fed up. I'm like, man, re-election was great and all, but maybe screw you guys. I'm going home. But that gives away a little bit too much about this Rainbow Puke Pepe the Frog behind the screen here. As I noticed that everybody's just getting doxxed lately on your shows, so I'm the only undoxxed.
I'm not trying. And I don't require it. As for example, Exhibit A, I do not require people to be doxxed, but I make people comfortable. I think that's why this actually works like it does in general. Like
I would agree with you. I'm comfortable speaking to you. I'm comfortable, in the community. And there are some people who actually do know me. They're usually personal friends that I'm bringing into the community, but the internet not so much. So
Yeah,
yeah, been
listen,
there, done that.
I totally respect. There are a number of people in our community that don't want to come on a show at all,
Yeah,
even in the capacity where they're talking behind their PFP, because they're not ready for that, or they're not interested in that level of personal exposure, that's fine. We don't
yeah.
if you want to come on and chat, you can. If you want to come in and use a voice changer or something like Fresh Stephens, that's fine too.
uh,
But
yeah.
anyway, yeah, we try to make it light and easy, and nobody has to dox on our show.
But they want to, and that's a beautiful thing. So there
Right.
you go.
And I don't. I guess I didn't know he had never. I didn't. First of all, I didn't know George was going to come on doxed. I didn't know if because it's not a requirement.
Yeah, yeah.
And I didn't know when he showed up on screen that he had never doxed before. So
Yeah.
I didn't know until we were live that was what we were talking about. So,
Hey, it's all good. I'm gonna have to go back and catch up. I enjoy actually catching up after the fact when I can't make it with some of your shows, because you get a lot of alpha on these shows, and we're about to drop some more because we've been doing this. This is our 5th week now doing this, right?
this is episode 5. Yeah, man.
Wow, time flies, man. It really does. So we've gone through the basics. Like, we're done technically. I have all I can give, but I'm gonna give some more alpha, because now that I've laid the foundation for how we should be breaking down charts, and how the process specifically that I go through, and kind of relating that to understanding the fundamentals, and then you can go in any direction for any system, or just stick with the fundamentals that I showed for trend, support and resistance, volatility and momentum. Well, you can just stick with those and be very successful in identifying the areas of interest on a chart to the upside and the downside.
So I'll tell you to that effect,
Yes.
right? The prior 4 weeks and the stuff you taught me through this series prevented me from catching some falling knives over the last 2 days.
Yeah, I've actually gotten a few DMs about that, and I'm glad. I'm happy that is assisting. And now it's really about anyone with those basics, which you do need to practice, and you need to sit down at a chart and back test and look through and really study the chart and identify your trend, your different support and resistance areas. Look at where volatility is compressing versus expanding, and then how that fits into momentum, and how those 3 act as a driver from momentum to the upside or downside. Once you go through and you really study that, you can go and you can chart, and you can start creating a trading plan. And that's something that we're not necessarily going to get into today, but what we're going to do is today's just going to be like an exercise session, because I think that that's really important to see the process in full from start to finish with just a naked chart, and kind of walk through breaking down what is going on and what might potentially happen, because we have an interesting setup in markets right now, especially for Bitcoin, which is what I typically show everyone. And that's going to kind of bring together all of those 4 domains of knowledge that I was talking about. And from there, we can begin to add on extra stuff, right? We can add on many of the things that you would want to check on, that is ancillary in my opinion, but will help lend itself to confluence. And before we get started, I want to ask that everybody that I see in the audience here, If you can go ahead and like and share the X post or the for the stream, or even the YouTube link, either or. One of the things I did want to ask, Peace, what is this streaming out at? 1080 or 720?
I think it's actually 720. It's auto based on there's settings in
Right.
there's settings in hold on, video resolution. It's auto, but I think their HD is 720. I think that's
Okay.
what stream does.
Okay. So yeah, I was getting some questions about that. So for those that were asking me, yeah, it is 720 right now. Maybe in the future we'll talk off stream here about possibilities for
Better
1080 and
quality.
what that might include. As it's a little bit easier to see some of the lines on the chart at 1080 versus 720. But for those of you that are out there in the audience, and the DeOrganized and or Peace Love streams on X, go ahead, and we even have the Bitcoin Live on X as well. So we're across there and YouTube. Go ahead and just like and share that out there. So before we get rolling here, we can get more people in. They're not just coming in the middle of a thought or something and going, "What? I'm so lost," and then they have to totally roll it back. But Peace, why don't we go ahead and share this buck naked chart here? There's nothing else going on this thing right now. And if we can, let's go ahead and full screen that.
Yeah. Let me
there we go. Awesome. And I think, oh yeah, I just got somebody saying that there's the yep, so they can see it full screen now. Good. There is a little bit of delay. There's less of a delay, it seems like, on X than there is on YouTube over here. Unless there's not many on YouTube, as it is a new account, correct? On YouTube?
Yes, it's new within like the last month and a half, and we haven't really done much marketing on it yet, because it's really just most of our stuff is on most of our reach right now is on X. We are expanding. We even have a Twitch account now. It's on Twitch. It's streaming on like 8 platforms right now.
Awesome. Well, I see we've got GPSC and Dev in the actual chats that we can see over here. I know it's aggregating the chats, but how you doing, GPSC and Dev? We've got quite a few others in the audience across the various streams going on right now. So again, go ahead and like and share this out there. We're going to kind of jump into this here in just a moment. As many of you know, Landy can talk forever. So Peace, do you have anything to kind of maybe ask me up front here before I get really rolling into this? Or
no, I'm actually very curious to hear what you have to say. As I had mentioned, I have been working with the pieces you've put together over the previous 4 episodes. Where I'm looking at it right now, it's hard to it's not easy to predict exactly what's going to happen from what I understand on what to look at. But it does look like, well, from where I haven't looked in really since early yesterday, and I haven't had a chance to really like
sit and break it down.
Yeah.
Well, we're going to do exactly that. So, we've got the Bitcoin chart here. It is naked. And I often actually just trade naked charts. It's just candle reading, and my eyes already draw a lot of those structural lines for trend. And just looking at the chart, I can see where the support and resistance is, that kind of thing. But I still make charts, and I still look at the chart and break it down much in the way that you see in my pre-recorded videos. So, when looking at the local price action, we can break this down pretty easily. So the first thing is going and looking at what type of a trend it is. And it's pretty easy just by eye to identify that this is an uptrend. We've got, there's a lower low structure here, but after that we get higher high, we get a higher low, Um, higher high, higher low. We got a little bit of a swing high here, but this is just a continuation move up to the higher high, higher low, higher high. And then we've got, a bit of a messy local structure here with a giant doji candle. And this is where we have a smaller body size candle with very large wicks to either side or very large swings to either side. So this was an indecisive candle. This happens to be the candle that put in the current all-time high at $104,000 even, and a low of $92,055. But the structure is still intact here. We even have a little bit of a higher low structure on a close right here, but we do have, this doji is kind of messing things up. So in terms of, our bullish candles, which are our green candles, where the close is higher than the open, and our bearish candles, where the close is lower than the open, we've essentially established that, when you open a candle and the close is higher, that price has moved up from open to close. Therefore, it is a bullish candle. When we have our red candles, like these ones here, they're a little bit more purple on my screen, to be fair. When the open or when the close is lower than the open, then price has moved down, right? So that is our bearish candles. And as we're coming off of this larger move up, and we've gotten some consolidation. This is what this is. This is a consolidation structure. Just looking purely at the price here, we can see that it's, kind of, wedging itself into a common area. If we were to, put a moving average on it, for instance, if we were to throw on our volatility metrics, this is the Landy bands. By the way, this is in the link in my profile. It's the bit.ly link on X. This is a free indicator. I don't charge anything for this. It will always remain free. It's got a lot of different bells and whistles to it, but I mainly use it and show it in the context of measuring volatility, utilizing Bollinger Bands, which is my preferred measurement for volatility, paired with this BBWP or Bollinger Band with percentile. So kind of a callback to the volatility live stream that we did. And this is a good measure for when things are compressing, when price action is compressing, and when it's getting expansion. And in terms of trend, during this uptrend, we had a nice big expansive move up, and we see that we came off of some compression over here, and then we got a nice big expansive move up. We've got some mean reversion back to the basis, which is just this red band in the middle, or this red moving average. It's a 20 simple moving average. I'll get into explaining moving averages and how they help us kind of identify the general trend and what some of the best practices are. But realistically, many people there's a lot of arguments in the TA community about which ones are best. And I don't even really use them that much outside of the Bollinger Band set, using that 20 simple as a basis band to help me gauge volatility, compression, and expansion phases. So we've got the big uptrend, and we can see that we've got some areas of support, right? That were previously resistance. Over here, we've seen that we've gotten candle closes and swings or wicks back down, and we've found this area as support. And then we've got some overhead resistance that has, while it's ticked up, it's been a pretty common area around that 99 to now $104,000. And that's where we can start breaking down more locally what some of this structure is. And you'll notice that I talked about trend and I talked about support resistance, but I threw the bands on first. And that's actually for some confluent areas of interest, because we went from expansion into compression. We can very easily gauge when expansion is going to kick off again. Now, in general, we'll start to see the etchings of expansion begin below the lower first or above the upper first. So that's that gray zone between these two areas around the basis band to the downside and the upside. Here you can see the Bitcoin is traded down below and is currently above the lower first standard deviation. Now, when looking at volatility down here, we have a 9 under 14. What this is it's saying that, we're volatility is decreasing. And the 14 is just a moving average. That's actually, I believe that one's a 5-period. Let's go ahead and actually take a look so Landy's not completely out of whack here. And seeing as I'm actually the one that changed it, I believe it is this is a 13-period moving average actually, or that's the BBWP. It is a 5 SMA. So 5-period moving average. This box down here on my indicator as just reading. Thank you, Caretaker, by the way, for allowing me to use your code in this. It's reading this BBWP volatility indicator by the Caretaker. You can actually get this in charted format. It's free. Just type BBWP if you'd like the actual charted version of it, not a little box. But the little box is included in my indicator so that you have the bands and the volatility metric right there in front of you all in one. And if you have just the starter accounts on TradingView, the indicator that I built has a whole bunch of other stuff. It's got the bands, the BBWP volatility metric. It's got moving averages and even some visual aids that you can turn on and off there. But in this case, we can see that we went from high volatility to low volatility. Essentially, we went from expansion to mean reversion back to the basis as the basis has moved to the upside with price action. So expansion, back to mean reversion, back to the basis band here as price has moved, as the band's kind of caught up with this consolidation structure. And we can identify that more aggressive expansion will begin on any closes below the lower second or the upper second, which is going to be the teal bands or the green zones here. So we'll see the etchings of expansion begin. So volatility expansion within the bands will start to begin, of course, to the downside in this case on any closes. And this is very specific, any closes below the lower first, or volatility expansion will start to show up and present itself to the upside here towards the upper second on any closes above the upper first. And we won't see aggressive expansion actually kick off until we see closes either above the upper second or below the lower second. So that's going to be some criteria where we can identify where horizontal support and resistance is. So on the downside here, price is above it. You look down here, we have areas of interest for support. So in this case, we have the most recent low. Yeah, I saw that you were, I saw a piece accidentally dropped off here, but that's okay. He's having some internet issues, but I believe he's making his way back. Anyway, let's see. We have this area of interest right here at this low of the Thursday, the 5th candle, and this close here right around $92,000. So we have a common area of support that we can mark down on our charts here. It's also a close open area, so we'll go ahead and mark that. And we can see that if Bitcoin were to close below the lower second here, it would get more aggressive expansion of volatility, but we would need to see it start to break down from this low structure here. So if we were to now give this some more criteria, we can take the swing low to the closing low. We've seen that this area was tested recently, and that this was also an area of prior support found at this low, which was confluent with this prior resistance where Bitcoin was finding resistance over here where this high side structure is coming in. And we can mark this area as an area of interest because if Bitcoin were to close below the lower second, we would get volatility expansion into this low side structure. We can draw a box around that. So I'm just using horizontal rays on the bottom side there. We can draw a box on this one, and we can just call this, an area of interest. And it doesn't have to be a specific color. Sometimes I will color code them just for sharing. Now, we can see that if Bitcoin were to close below the lower second, it would get expansion right into where the lower third is. and that is around 90,500 or so. And if it were to drop this area specifically, that's when we look to the next area. We have a swing low with a close open here at around 89, almost $90,000. So this is an area of interest to this low here, which is right on this close open. The first big bearish candle, or the first actual bearish candle, not a big bearish candle. It was actually a doji candle. But we had a big bull candle here with a little bit of a back test, about 50% of that candle. We'll talk about rules and general best practices for looking at backfills. This was a backfill candle. We see that we found support right on that low. So this would be another area of interest. And you'll see that realistically, we have one low side and another low side structure, both within where we found resistances, and then we flip them to supports. So we could, in theory, make this one big zone where we're not looking too much further down than 88,700 unless we get full on expansion to the downside. But because of where the lower third standard deviation is, and we know that if we close below the lower second, we're starting to get the initial expansion into support, that if it were to expand down through by closing below this low over here at 90,000, 500 to 600, we're going to get more aggressive expansion into the next area of support. So typically what I'll do is I'll just mark this low very simply, either with we can mark the close open, we can mark the low. If we mark the close open, it makes us look really smart. We'll be like, hey, look, it bounced off of this area, and this was a backfill order block candle, and then we can talk over people's heads and no one will care. But realistically, we know that if we get any closes below around 90,500, we have to pay very close attention to this 88,700 or so. And then from there, that's kind of a checkpoint. That would be like, okay, we're getting expansion down into another area of support here. So as long as it's holding the line on closes above that 88,770, and that, by the way, when I say closes, that does mean that price can fall through it. As long as it's closing above, we wouldn't look for continuation down. But we would want to look for possible bounces around these two zones to the bottom side. Or they're going to act as criteria for confirmation of a breakdown further. In this case, I would mark the next big zone would be the close open here at 87,343.50 to this actual candle, this backfill candle here, low at $85,000. So that would be the actual, like, okay, danger, Will Robinson. We've got a problem here. Bulls are shitting the bed, and we need to go ahead and just understand that if they lose that 87,340 to this $85,000 low, we're likely looking for more aggressive expansion to the downside and a much larger correction. So we've got some areas to the downside to pay attention to, and this is all born upon where the trend is, right? So if we were to break down through this low, by the way, this would be a break of the uptrend. So this would be a trend break right here, because we have a nice uptrending structure, right? Yes, there is some messiness with this doji here, but we still have higher lows and higher highs. If we were to break down and close below this 90,682, and especially, getting that expansion down, we would get a structural break, right? So we'd get that trend break with a lower low. And then we have to start paying attention to this next low side structure just below it. And if that were to fall apart, especially on closes, then we have to pay attention to the structural candles lows on the way up, where we had a little bit of consolidation before pushing up. To the upside, it's the same kind of deal. If we were to look at the last high, we can pay attention to this close open high at around what is this, $99,000 with that 99,860 wick high. So that front run of $100,000 right here. This is the area to the upside. You'll notice where this puts price in relative context to the bands here. You'll see that this is bracketing this high is where the upper first standard deviation for volatility is. So if Bitcoin were to regain the basis band, then we're looking to the strong half of the bands. Basis band is at 97 100, we would start to look at this overhead resistance here around the upper first. So we have confluence between a horizontal level, which was a higher high structure at the time, and we can see that we're looking at the upper first right there around 99 300. So we would need to see closes above the upper first and this high at 99 860 to then look further up to the next big area by the upper second standard deviation, which is now at 101,500 here. And this just so happens to be around a close open high. And then we've got a much higher high on the swing up there to $104,000. So we can mark this area as the big area of resistance overhead above this this high that came just before it. And we now have a completed view, and we have criteria of how to kind of gauge the areas of interest on our chart to the upside and the downside in terms of our zones. Now that we've got that kind of laid out, we can color code them if you want. Like we've got the zones closest to price, we can keep those yellow, and maybe the zone up top we can turn green to say like, hey, green means go. Above here, we're looking for above this entire zone. We're looking for this to act as resistance, but above it, we're looking for this to possibly head to the upside here and get that expansion, because you can see that the upper second standard deviation and the upper third standard deviation are right here. So any closes inside of this zone around the 101 to 10500 level by the upper second would initiate volatility expansion to the upside, but we still need to see a close above that now high at $104,000 to get the real expansive move, right? So we can expand into it in terms of volatility, but we need to see closes above it to get that volatility expansion to the upside. So we have some checkpoint criteria there. And if I go to the box and actually make this what I wanted it to be, which was yellow outline with the green bucket in here, so we can say that's the big green zone to the upside. And then we've got the red zone down here. So we'll this is like, hey, danger below here on closes. We're looking for more aggressive expansion, or at least a deeper correction. And it doesn't really mean much. We're just kind of color coding some support and resistance areas. But now we've got the stoplight. We've got green, yellow, red. So I call this the stoplight setup. Are there more local levels to pay attention to? Absolutely. But those would be on lower term timeframes. We're breaking down the daily in terms of daily expansion. And right now, there's a lot of price movement because on higher term timeframes like the weekly and monthly, we are in a high volatility environment, which means that even in this compression on the daily, we're getting massive moves, right? So we had the big expansion up. We have our structural areas of interest that create our support and resistance zones in this uptrend. And even as we've got volatility expansion to contraction, we can have massive moves inside of this volatility compression as it compresses. But realistically, what we're looking for is where are we going to begin re-expansion of that price volatility in a big way. And honestly, even below the lower second and third, you can see that there is some major areas of interest that Bitcoin would have to get through to get continuation further down in a wider structure set. But it would still be a big move. I mean, we hit $104,000, and a drawdown to $85,000 is a 19.5% correction. In fact, that would be, we can actually measure that. We have tools so that Landy doesn't have to do any math here. And that would be a 18.32% correction, or 18.25% correction or so, which is a big one. Could we see a swing below that?
Right. It happens during the bull market.
Oh, absolutely. We've seen much larger corrections than that. Even last bull market, when we weren't trading nearly as high as this, we were trading around the 40 to $50,000 range. We were getting 20% corrections in a matter of a couple days that went on for a couple weeks in some cases, but they were usually pretty quick. And
Right.
that's what we expect to see in a run like this. Could we get a larger, more prolonged correction for like a week or two or a couple of weeks? Sure. I would say that, for continuation purposes, we need to see some very specific things happen on the monthly and later and longer term timeframes. That's stuff I get into in my videos, for criteria for expansion to the upside to continue in a very aggressive way without these volatility levels having some significant resistance or acting as significant resistance. And you can see that, the basis band and then the first, second, and third standard deviations to the downside, just like the first, second, and third standard deviations to the upside, they typically will act as support and resistance areas when you're coming into a compression, and then they will act as lower term time frame checkpoints for expansion, right? So if we start seeing, for instance, a 4-hour candle close below the daily lower second at 92,750, we're probably looking at, if we didn't already see, price moving down into this zone, at 92,000 to 90,500 to 600, it's likely that it would. Doesn't mean it's going to, but we can use this level of volatility on the daily as an area of interest on like a lower term time frame, like a 4-hour chart, as confirmation we're starting to close below there. If this doesn't start to bounce soon and it closes below there on the daily, we're getting expansion to the downside, likely into this support. Now, if it were to break down from this support, lower second and lower third, we're looking at very aggressive expansion down into the next area, which is, right around this low side structure, which, to be fair, we could make another zone out of it, but it's not really that needed because we would be below the lower third at that point. We're looking for aggressive volatility. So anywhere between the, basically 90,000 to this 88,770 low here, which is this close open right here, right? Anywhere below there, we're now in a pretty high volatility environment, right into a key area that the bulls would want to hold around that $87,340 to $85,000. Just like to the upside, get back above the basis here, likely above this high around 97.5 to the swing, that's coming in right at that just shy of $99,000. Then we can, look to $99,000 and this upper first standard deviation, start closing above, basically $100,000. And we're looking to the upper second, running this high again, at around that 101, 174 at the close open high to this entire zone up here, where we'd want to see closes above around 101,500 to actually get true expansion to retest that $104,000 wick high. Above there, we'd be looking for that, closes above there to really kick off expansion to the upside, because that, from this perspective, would be above the, not just the upper second, but the upper third, kicking off very, very high volatility expansion to the upside. But again, moving into these areas when we're in a compression or going into a compression, they typically, not always, they typically act, especially on dailies, lower term timeframes, not quite as much. But on the daily, we will typically see from expansion into compression, these areas act as areas of support. We will often find that those areas of support, or resistance rather, not just support, but areas of support and resistance, we'll often find that they line up with key horizontal levels based on our trend, right? So in this case, the uptrend. As you can see that they are. This is upper seconds right around the high. The lower first, when it first got spiked, was right around, this low side structure where the swings were coming in. And lower term time frames, that was a close open over here, and lower term time frames, that was a closing low, down to the wick low, right? So lower second is now, above, which I like to see, by the way, above this area of resistance that was flipped into support. So, when Bitcoin spiked down to this area, even, lower first was here when Bitcoin ran the highs and the lows. By the way, it hit the upper third standard deviation, rejected, and kind of held up around the lower first, right right front running this low side structure right here. So, we have pretty easy criteria that Bitcoin's either going to meet for the expansion to the downside or the expansion to the upside, and we get to determine our criteria for that, and it helps us basically break down our areas of interest for trading that we can build a trading plan around. Or if you already have a trading plan, which you should, by the way, if you're trading, you need a trading plan and you need to risk manage that trading plan, or you should start with risk management and then create a trading plan, but that's for later. But this gives us our skeleton. And then we can go and we can, it's a pretty high volatility environment. Then we can go and start looking at like, okay, well, we talked about, the trend, the support and resistance we got here, the volatility we got on the chart. Okay, Landy, I understand if we break down below here, we're getting expansion into more downside areas of support, which means we're getting a much bigger correction. Okay, Landy, if we start closing above these areas, we're looking for expansion back to the highs and higher. Need to see closes above to get that next leg, basically that expansion to the upside, right, for deeper targets. Well, that's all fine and dandy, but what else can I use to help me? Well, we've talked about trend, support and resistance, and volatility. We can use momentum, and there's two different momentum indicators that are very popularly used. I like to use them both myself, and that's RSI and a stochastic momentum indicator. And I discussed this in our last episode for momentum, and I told you that we're going to be talking a lot about it because most people start with momentum and use that as their quote unquote indicator on where things are going and what the direction is going to be. And that is not the way that they should be used. They should be used as confluence for all of the criteria that we just went through right now when breaking down this daily structure for Bitcoin. Now, that is not our BBWP, but we can start with our RSI, for instance. And we can see that on RSI, we have higher highs on price action and lower highs on RSI. We have many drives of bearish divergence on the daily. So that is just where we're getting the relative strength index is showing weakness as this move has moved up. So it's basically running out of steam or running out of momentum, right? It is a momentum indicator. So as this has kind of fallen, we've seen higher highs come in, and then we have bearish divergence building on the other side. And in addition to that, this was something that we were being warned about ever since essentially this high back here, which by the way was at 73,638, which was still a lower high. This was of course a higher high in trend, but it was a lower high than the all-time high at that point. But it was testing the all-time high at 73,835, which was this high over here. It had just begun to test that area, pulled back, got a big move and correction on compression into that expansion, right? So that high right there is where we're seeing, the more recent bearish divergences come in terms of RSI. And then we had the bigger divergence between this swing high and this closing high up here between these 2 points. Let's go ahead and actually pull the right indicator or the right tool here. So between these 2 points, we had bearish divergence, and then we're getting bearish divergence from that high in trend from prior to the breakout move up. So, this is normal. On the other side of this, we want to see higher lows with lower lows on RSI. Higher lows with lower lows on RSI would be our hidden bullish divergence, otherwise known as a continuation drive. Some people call them phantom drives. I think Eric Crown over there at Crown's Crypto Cave calls them phantom drives. Again, this is I've talked to a lot of the developers over there in his community. I'm a big fan of his developers that he's curated for his indicators over there. And this happens to be another one of, I think this is Caretakers as well. I can't quite remember for RSI, but he's an awesome dev. So you'll see a lot of very common tools because I'm a big fan of the devs over there. But in this case, you can use any RSI, and you can see that, the relative strength and momentum was waning as Bitcoin was making higher highs. And this all fits in context. I mean, you can see the big acceleration initially from compression over here to expansion. So that was a big acceleration in price and a big volatile expansive move. And then we've gone into compression, which means that we are slowing down. We're getting the moving average here, the 20 simple moving average catching up, which is our basis band. So this is telling us, yes, price is making higher highs, but momentum is waning or slowing down. Does that inherently mean that price has to fall down to all these really, really low levels? No, but it's more often than not a good metric to be watching. We can see that we have some areas of interest. This is a fancy dancy indicator, so I can actually look at the areas of interest, like where the scale midline is in the calculation for that. It's at 93.5. And we can just kind of gauge. There's plenty of indicators that are free and paid that have this stuff. You just got to do a little bit of searching in the indicators tab up here for RSIs. But there's quite a lot of them that will give you the readout for different RSI levels. But 93.5, is the scale midline, and that's in between the lower first and the lower second. So it doesn't do much in terms of turning me really ultra bearish or anything like that. Let's look at where the bearish control zone is on the daily. Bearish control zone is down here. This one has a 38 read for the bearish control zone, and that is $85,000. Hey, just so happens to be this low. So if we were to fall into the bearish control zone or near it, we're testing into this red zone down here. So from an RSI perspective, I have too many lines here, so we got to move this. From an RSI perspective, we're seeing the confluent area down here as being this red zone, and specifically the bearish control zone entry point there at the 38 read is this low at $85,000. So we have confluence. If we were going to fall into the bearish control zone, meaning we're now see RSI dipping in there, that's because price has fallen below this low, which is kind of the last big low, and we're just looking at lower term timeframes and then down much further in terms of a corrective move. Could it swing into that area and then close above? Sure, but remember what I told you, RSI is closes. So this is measuring closes unless you've changed your RSI. But this is measuring closing price. So closing price would be that $85,000. Breaking into that zone would be closing below that $85,000. Now this will update. So this number is likely going to keep creeping up because it is a momentum indicator. So every period that we're using on this, which is I think we're using, RSI period is 14 days. So every day it's updating. The last number is falling off and we're adding a new period. So what we end up with is a little bit of adjustment day to day. But right now that area is confluent with the bearish control zone. To the upside here, we've got at the 62 read, the bullish control zone. However, what would price be? Well, price would be just below $100,000 at 99,715. If Bitcoin were to be testing back up towards the bullish control zone, I have a moving average on here. This is a 12-period moving average. This is just an extra indication. It's a nice back-tested moving average for RSI momentum.
I know you said it already. What's this indicator again?
This is RSI.
But this is just basic RSI. You can get all of this stuff.
This one's no, you're not going to get all of this on your basic out-of-the-box RSI. You can search for RSIs with divergences that will call the divergences out for you. And many of them will have a little panel with the readout for the levels. If you don't have one, I can always suggest one in our next episode. I'll go through and find a free one. This is a paid indicator, but there are a bunch of free ones that you can use and customize to your heart's liking.
All right. Cool.
Yeah. The straight trading view RSI, no, it's got other bells and whistles, but not this kind of stuff. I don't even think it has divergences that it'll show you. So you do want like an RSI with divergences, or you can just draw the divergences on yourself. It's just, even these ones are a little wrong to me in terms of where it's picking out the high versus where I'm picking out the high. You can use just a clean RSI and do it yourself. This is just the one that I show in my videos all the time because this is, it's got the nice panel. I like the layout. I've customized it to my liking. You can do the same with your own. The real point is that you see higher highs on price and you're seeing lower highs in this case because we were in an uptrend. Higher highs on price and lower highs on RSI means that we're running out of momentum to the upside, right? That is also noted in our basis band catching up with price kind of having a common price and going a little bit sideways and up, and the band showing us that we're going into compression, which we can see visually on the price chart when it's naked anyway. But that would be momentum slowing down. And that's the point here is we see that momentum is slowing down. We got some extra areas to pay attention to though, because one of the things is using indicators should have a purpose. Everyone can see that momentum is slowing down. I don't necessarily need an RSI to show me that. But right. If I can have an RSI or what like the one I have, which has these, different levels of the RSI where it can get a price readout day to day, I can find further confluence with the areas that we just talked about on our charts here. So I do suggest that you search for an RSI in the indicators tab here and do RSI with divergence or RSI panel or something like that. And it will, source you a lot of different indicators in there. I can't go promoting any because I don't know any that are, whether they're free or paid. Most are free. Some are paid. You'll see the lock next to them if they are paid, but I just look for free ones. I think there's one called the advanced RSI and it's all the same stuff as this indicator. It's just got bells and whistles on it. Now, the other momentum indicator that I like to use, and remember, we're the bulk of what we want to see for price. We don't really even need the momentum indicator because we already defined a bunch of criteria for expansion to the upside and downside, right? We identified the areas of support and resistance as well. These are just things to help assist, right? Because trends, support and resistance and volatility make up momentum. So it gives us another metric or another view of price. And in this case, I've got another fancy indicator that you don't need. I have one that I will shill that is free. It's called the BA Pig Reverse Stoke or BA Reverse Stoke Panel. You just literally type BA Reverse Stoke, and you will get the same indicator that I have here. I have them both on at the same time so that you can see that the pricing is the same as a fancy paid indicator that has extra bells and whistles right here. So in fact, let's go ahead and turn off the fancy indicator that has other things that I'm going to talk about later on, like ADX and DMI. And we can just see that this is a regular Stoke. Now, again, this is a crypto optimized regular Stoke. This is not a Stoke RSI. Just about every TA quote unquote expert that you see out there is going to show you Stoke RSIs. And a Stoke RSI is simply a tool that's measuring the RSI. So we already looked at RSI. We don't need a momentum indicator for what we've already seen on our momentum indicator. I think it's redundant and I don't think it's needed. Some people love them, especially Elliott wave guys. And this is where I will take my obligatory shot at Elliott wave guys for not understanding volatility. But sorry, Elliott wave guys, I still love you. Anyway, now that's a little bit of an inside joke. But they like their Stoke RSIs in general, not all of them. Some of the more popular people do though. Now we can see that this is a regular Stoke. So what is this measuring? This is measuring close price momentum, as I had mentioned, last week in our momentum episode. So, the closes are getting lower, which means that we're likely looking at a momentum shift. And well, we already kind of saw the big momentum shift coming off of this first high that was put in. And then we did make higher highs, but we did not fully turn momentum around in a way that was confirmed.
So hold on, I just want to clarify, because RSI is the data based on the close
yes
momentum.
Mm-hmm.
and a stochastic, the stochastic RSI is giving you the momentum of the RSI versus the momentum of.
No. So Stoke RSI, which I'm not using, I'm using a regular Stoke.
Right.
A Stoke RSI is a momentum indicator of the RSI. So
Right.
it's a derivative indicator. Essentially, if this was a Stoke RSI, which this is not, that would be measuring the velocity or the speed at which the RSI up here is changing.
So the velocity of the velocity.
Well, the velocity of the momentum indicator. So this is your momentum indicator.
Right.
And a Stoke RSI, which looks very similar to this, is the velocity of that momentum indicator. But this momentum indicator is purely price action based. So this isn't based on the regular Stoke is based on close over close price momentum, whereas an RSI is showing us closing price momentum over time, where we're putting in swings, right? So this is showing RSI momentum indicator is showing you the relative strength of momentum on a swing basis. So we have swing highs, we have swing lows. So what is the momentum? Are the highs still, are we getting higher highs on price and the relative strength, meaning strength is increasing with our higher highs? Or are we getting higher highs with lower highs on strength, meaning that we're losing that momentum? That's what this is telling us on a swing closing basis, right? To the upside, for high side structures and for our low side structures, right? Is price moving down and putting in swing lower lows, but it's losing strength relative to the last swing lower low? That's what RSI is telling us. Whereas, and I don't need a speed-based indicator. I don't need a velocity of RSI-based stochastic momentum indicator. A lot of people use them and it goofs them up, and that's because they see other people who have integrated into their system who maybe don't reference RSI very much, and they'd rather just see how quickly is the momentum changing on RSI from swing to swing. I don't need that. I don't use it. I'd rather use a close over close momentum indicator. So it's telling us as price is closing day by day, what is the momentum? Is it up or down? And it is a lagging indicator. It's running crypto optimized settings, which is not something that I need to get into now. But for the nerds out there that might be watching this, it's 6.3.14.255. Look back. You're welcome. You can set up any Stoke to do this. I like Stokes that have pivots because they give us nice confluent areas to pay attention to. Now, with a regular Stoke, you can also use trend lines. And this is the only place you're ever going to see Landy use trend lines is on a regular Stoke for mean reversion plays. And we see that, I like to use these. I don't use trend lines on price action. I know people are big fans of them, but I can make a trend line do anything I want on a chart for confluent areas of interest. And, that's just my take on it. Some people are really into it and have a lot of success, and I'm not dogging them. Continue using them. But you can see on this particular momentum indicator, I can draw a little bit of, general trend line regression stuff here, right? So we've got in this uptrending price structure, we've got even all the way back here to September. You'll see that back here in September for price, if we were to look at price and just go ahead and remove all these different things that we've got on the chart here, and we were to look at price back in September for this larger momentum structure, this was back on the lows. We were trading at $53,500 or so, 52.5 on the close there, which was a higher low relative to this higher low. We also on the RSI, we saw that we made lower lows within the structure. And actually, was it a lower low close? What was the close here? Yeah, it was 53,950, and this was 54. So yeah, it was a lower low close. That's why we got that bullish divergence, regular bullish divergence. Lower low closes, higher low relative strength there. and we got a nice bullish divergence. Price bounced up from there and started to then become what it is now. And we can see back here we were at very, very low levels on a regular stochastic momentum indicator, and we've been bouncing off of this more parabolic trend line regression area on each and every subsequent trend shift or momentum shift in price. We can see now that we can actually use this as criteria. I talked about the more parabolic trend line here for trend line regression for momentum. We did get a little bounce here, and this was back on the 30th. That is right around here. So when Bitcoin had already bounced, it tried to keep that there and then went sideways and then dumped down in terms of momentum here on the bearish candle that actually put in the current all-time high. And we even bounced back up in the day after in terms of momentum. So we started to close back up on this higher high structure, but we then since turned around, and we're now right back at this lower trend line regression. And if this breaks down, it doesn't, is it like a death sentence? Does it mean that everything's going to zero? No. It's just we don't have any trend line regressions to pay attention to. We have to rely on momentum just being down on the momentum indicator because closes are getting lower, right? And that's likely going to be that way if it closes like this. It's probably going to break down from there on close, because coming into today we're a day behind on the momentum indicator. We don't see it updating live with price, so it's reading yesterday's candle. So if today closes like this, we're going to see it break down from that trend line regression. Are trend line regressions really that important? No, they're just areas of interest to pay attention to for momentum. If there are any trend lines to pay attention to, that's just a tip. But we see the momentum is turned down, and it's not going to turn back up in this case, until we see improvement in morale. No, I'm sorry. We need to see price head back up, right? And specifically, I like momentum indicators like the BA reverse Stoke, because they tell us what the pivot number needs to be in order to cross momentum back to the upside. And this is 99,284. So basically above 99,300, we would see momentum turn back to the upside. And also, if we were above 99,300, this is why I like having these indicators that help us with telling us what the price target would need to be for that pivot. Well, if we look at 99,300, oh, hey, that is the upper first standard deviation. For those watching this in 720p, it is 99,300 basically. That would be price trading back above 99,300 today. Doesn't look that way. Weirder things have happened. It is, there's 4 and almost 5 hours to go for price, but it's looking a little less likely right now.
So
but again,
it would have to close above that today to get
an initial cross of momentum back to the upside.
Right. Okay.
I would say that is highly unlikely today. That does not mean it won't happen, but it would be abnormal intraday this late in the day for things to happen. Everybody talks about turnaround Tuesday in markets, and it's very rare that we've gotten turnaround Tuesdays. Usually it's a Wednesday and a Thursday reversal. It doesn't always hold true, but we're about mid-month for December. If you're to look at history, and this is just me being a history buff in terms of the charts, in terms of history, we typically see a little bit of a rundown mid-December, a little bit of a pop-up towards Christmas, and sometimes a crash after Christmas. It really depends. It doesn't always hold true, but from a psychological standpoint, in terms of price action, we typically see a lot of tax loss harvesting as well. Kind of tough to tax loss to harvest Bitcoin right now when it's up so much, but
yeah,
unless you're just doing a little bit here and there to like short it and then take the other side or exit out of a position and move it over. I don't know. It's a little difficult. You're not tax loss. I hear that a lot. Oh, we're tax loss harvesting. Like, man, you do realize you have to take a loss, and everybody's winning right now in markets. So
Right.
if
Well,
you're
you're not.
what are you tax loss harvesting right now? I mean, like maybe you're going through like old dead stuff in your wallets and like dumping it, but is it really going to make a difference at the end of the day for most? Probably not.
No, plus you have to have gains you're measuring it up against. Do you have a
Yeah,
gain?
exactly. And you're
Or
so
just
outsized. If you've been in this market before this breakout, your gain should be excessive at this point, right?
right, but then there's no unless you sold the top and
Mhm.
then you still don't have any you would have had to buy the top at the same time you sold the top.
It wouldn't make any sense.
There's no
So
right.
when I hear that in markets, so like everybody says like, oh, it's tax loss harvesting. And like,
It
do you
happens.
realize that happened when the lows were coming in? That's when the tax loss
Right.
harvesting was happening.
Exactly.
But realistically, you know, we have some areas of confluence for price right now, and around this time of year, you know, we see that players in the game are setting up already, and liquidity is being set up for the first quarter of next year. When you're in the fourth quarter, the setup is for the first and second quarter of the following year, right? When
Right.
you're in the first and second quarter, that's all set up for the third and fourth quarter of
So
that year.
could I just say maybe the momentum we've had was largely driven by not only but largely driven by the election. It's slowing down because that news is not new anymore.
Well,
There's
yeah,
still
I mean,
constant good news coming out of that, but it's all really just extensions of that same story. It's
well,
not
look,
necessarily new
coming
stuff.
into November, right? So you gotta see that when I hear like, oh, you know, it's because of the election that we pumped, but I want to call everybody's attention to this. You know, when people go, oh, it's the news, it's Trump, and like, yeah, no, Trump
It's not
helped out.
just that, right? It's not
He
just
helped out, right? But I want to point this out because this is really important. Um, we were in an uptrend since the 10th of October at that point. We made higher highs, higher lows, higher highs. He set the low that then kicked off the run. So that's what the election did in terms of excitement and in the markets. But we were already in a daily uptrending structure at this point, where we had two higher highs, one higher low. We just needed another higher low to confirm and then go and take out that higher high, and we've got complete trend to the upside. So that's, you know, that's where very simply put, we can take off every indicator on this chart. We don't even need to see anything else. And I can change this from candles to a line chart. And you can see kind of what price was doing in here between the 10th of October, where we had a lower low, but then we saw even a swing higher low close here. But realistically, we had a higher high, higher low, higher high. That's 3 parts of a 4-part trend. Higher low, boom, up and away, right? So the you can show any good technical analyst a chart. And by the way, you can't just be looking at charts and thinking that that is always going to give you all the information. It can help you derive what's happening behind the scenes, but I do suggest that you have a good base for fundamentals. So you do understand a little bit about fundamental analysis, which is looking at the asset and seeing what the flows are in terms of overall liquidity flowing in and flowing out. Volume will tell you that, but it's not going to tell you how much is parked on exchanges versus, you know, outflowing from exchanges, right? So those are always good things to have, and that's more supplemental for those that do TA first for trading. But I always take fundamental and technical price analysis hand in hand, personally. But for trading, you don't necessarily need to know the fundamentals because the auction is telling you everything you need to know about those fundamentals. Prices sideways and up. I don't need to go to, you know, CoinGlass and CryptoQuant to have me to have them tell me that, you know, well, there's probably a little less Bitcoin out there, and a lot of it's being bought up by people because prices in the auction is already telling me this. The other thing is there is a saying for those of us who are practiced in technical analysis is show me the chart and I'll tell you the news. And I've had arguments with even very, very large accounts here on X and formerly Twitter about this. We're like, no, you can't predict the news and blah, blah, blah. Bullshit. You can't predict the news. I bet you if this correction in terms of expansion resolves to the downside, that there's some bad news. I don't know what that news is, and I don't care what that news is, but it's going to be bad news, guys and gals. If it resolves to the upside, I bet you it was good news. I don't need to know the news. I need to know which way things are getting expansion. As I am a volatility trader first, I don't care which price direction it is. I don't care what the news is. I don't care what's happening in the Middle East right now when it comes to this particular chart. From a social point of view, I might care, but from the chart's point of view, I don't give two effing S's about what's going on in the world when the chart is telling me everything based on live sentiment. So we're seeing the live auction right now. It's pretty bearish today in the live auction, right? So sentiment's down. I bet you there was a mix of bad news globally and maybe some good news within the ecosystem. That typically is something that we have happen, like a lot of bullish stuff happening around the lows or the highs, is pretty common. There's all these, the notion of, you buy the rumors, sell the news. That is people's social construct that you can track on the chart. Right? It's not something that you have to just nebulously think about. We can define criteria for when that's going to occur. We can see that relative strength for this particular asset was waning as it was making higher highs, telling us that there was going to be a consolidation, correction, possibly a larger correction if things meet the criteria to the downside, right? Could it resolve to the upside? Absolutely. That's still on the table, but that's where, we'll expand on this in the next one, where we're going to do more and more of this, what we're doing right now, and start expanding that into lower term timeframes and relate it back to what we just talked about on the daily. And I'll leave you with this. If you look at this line chart, and I was to tell you that nothing has really changed since the 30th of November, people would argue with me. And I'm going to tell you that nothing has changed since the 30th November, because that's when we entered, when we went from expansion in price to compression in price. And even though we've gotten very large volatile moves and people are freaking out everywhere, not much has changed. Unless we meet the criteria for expanding below the lower second and dropping the lows, which would be expansion to the downside, then not much has changed. We'd be looking for a bigger correction. And until we see a consider, even though we made a new all-time high on a close and a swing, not much has changed in terms of price structure. We need to see the upper second break and a close above that all-time high wick. But higher high closes likely going to go test that $104,000 wick. And then we're looking for expansion to the upside. And we're looking for a possible breakout and next leg of a move. So far, it's just sideways and up.
Right. So right now we're still in that sideways pattern, essentially.
Yeah,
in that compression pattern.
Yeah, it's more sideways and up,
which
which is where you get a lot of bears saying, well, and they have a point, right? Where they'll be like, well, it's sideways and up. We're making higher highs, and price really isn't appreciating that much. Then it's probably going to correct in a much bigger way. And well, yeah, they have a point, but that doesn't mean it's going to happen unless we see specific criteria breakdown, for the breakdown on expansion. So, I mean, right now it would be expansion into a larger correction, still in structure for some of the most recent price action from the way up. It would just be this next big area. If, essentially this low is dropped, then we're looking for this area. And you can even be really general with it. You can just say, like, you don't need any of the boxes that I just drew. I wanted to point out that how they line up with areas of interest for confluence and stuff like that. But you can be just dead simple with it. Like, you drop this low. What's the area of interest? I mean, it's pretty straightforward. It's this structure, that's right below it, right there. Right. And then like, where's the next big structure below there? I mean, it was a straight move up if you look at the chart like that, right? It's all the way back here. Does that mean it's going to get there? No, but that's the next biggest area is like, then what are the possibilities? I mean, the possibilities are we could go all the way down here. That's possible, but then that's where we get into the more nuanced detail of areas of interest on the daily and even lower term timeframes. So, that's in a more general sense, we can see that this is, why do things work like this is often a question I get. It's like, why does it work like this? Well, that's because everyone that's participating in these markets is using prior price history as a reference for where they want to buy and sell. And it is a live auction that goes 24/7. So, and then I get like, wow, you don't know what market makers are going to do. Well, market makers don't move markets. Those are market manipulators. Market makers have limits for providing liquidity to the buy or sell side. And that's usually static. And it's static, but it's in a much tighter range than people think it is. It's like they're not at $104,000 with their shorts and, longing down at, the $85,000 region, right? Like they're much tighter. They're providing liquidity to local price action and arbing between the two. They don't do what many think that they do, where many people attribute market manipulation to market makers. Some of the same firms might do trading and have a market making wing. Do they talk to each other every once in a while? Maybe, never know. But that's, not their job. The other people making money in the markets by trading them are the ones that are quote unquote manipulating the market, with bigger accounts buying and selling. And what are we all using, including the algos, including the bots? They're all using history, right? If they're not using history and it's a new enough asset, then they're utilizing fundamentals and volume, which also, anytime you start saying volume, now you're talking about charts, which is talking about TA, because that would be technical analysis. Volume falls into technical analysis, but it's more, you're leaning more on the fundamentals, like how many wallets hold how much supply and stuff like that, right? So those are really like low cap coins or shit coins, excuse me. Not so esteemed coins that are on exchanges like Pump Fund that come out all the time and rug constantly. You can't do TA on that, Landy. Well, technically, any kind of fundamental analysis that you're doing and then looking at volume versus the auction, you're doing TA. You don't have to draw lines about it and make predictions about it, but you're doing technical analysis based on your fundamental analysis that you're seeing at the same time, right? Like that's technically TA. So, yeah, it totally works. And then you just got to know what to look for. And you can't just be like, well, here's a trend line for this and this, because there is no history. Whereas we do have history for assets like Bitcoin, and we have a long history, and people trade based on that price history. We can also get in, we get into things like Fibonacci's and stuff like that, which is, percentages. It's percentage based ways of evaluating price for retracements and extensions and areas of interest there at Fibonacci numbers, which I actually go beyond the Fibonacci numbers. I think they still stick to them for the most part, though, when it comes to Fibonacci extensions. But we're really just talking about price levels and percentage levels of pullbacks within a wider structure. For instance, a little preview of what we'll be continuing with in the next week's stream is like, you could take this local structure and we can go close to close for fib levels of interest, right? We can go close to close on this entire structure here for the high side and the low side. So the low side close down here to the high side close up here, and we can look at percentage values of interest. And you might just note that we are at a fancy Fibonacci number level of a 618. So this is at 95,648. Bitcoin, it's expected in most cases. Most algos and trading bots have this stuff built in. But if we give up more than 50%, it puts us at $94,000. then we're probably looking, for price to, either bounce there or, it's going to head lower, 92 to 90,000, 91,000 or so. Starts to lose that, then we're down towards the 0%, which is right back where we started, because it's 0 to 100%. And you can't beat 100% unless you put fib extensions on. And then you've got above here this is just a close structure. Usually you want to go wick to wick. That gives you a little bit more accurate areas of interest. Some people like the closes though. And 103,700 is the 1.168 for those that were wondering. That's not a 618, that's up here, but it's we've got a 1272, which is basically 16.8%, 27.2%, and 41.4% above this guy here. So it's an extension, utilizing the structures 0 to 100% as the base for these percentage values. So we're 116.8% or 127%, 141%, so on and so forth. But essentially, you can look at 27% above this high is 105,000, 107,000, and then we got 110,000 up here at the 1.618, which is another Fibonacci level. Not going to dive too deep into that. And typically, you want to turn on your either bars or candles. I prefer candles, and probably run your fibs from those levels. But it is interesting on a close that it is on a 618. Some people like closes. By the way, you're going to get Elliott wave guys freaking out when you do this kind of stuff, because they're going to be like, that's wrong. It's not technically, it's not by the book. And it's like, well, this isn't Elliott wave. We're measuring percentages here. Thanks, guys. If we wanted to do Elliott wave, we could, and there is value in doing Elliott wave. Just pay Elliott wave guys, start incorporating volatility. Maybe use a set of bands. It'll help you out. Yes, I did have an Elliott wave trader in my DMs telling me that I don't know what I'm doing. So I'm picking on you right now, sir. You're welcome. So 618, you can see that from wick to wick, this wick low to this wick high. So basically $85,000 to $104,000. Losing the 618 is at 96.29. But on the close, you could see the closing was at $95,000 basically, right? You can see that here, $94,000 is where the 50% level is of both. And really retracing deeper than 50% on this structure is probably where things are going to break down towards, hey, look at where this 382, 38.2% level lines up with this close open low right here, which was, the most recent major higher low. Yes, we did get a closing higher low here as well. So I would like to see Bitcoin maintaining this closing higher low structure more closely. That's coming in right around the 50% level. But then we want to see the next area of interest hold up below the 382. It's testing further down into the fib structure here to the 27% and the 191% there, which is just percentage values. I think they might fall on fibs, but I don't really care if they do or they don't. We've got the 888 up here, so we have confluent areas around the bands too. 101,500 is where the upper second is. We've got 101,677. You're not looking for these numbers to be exact, although sometimes they could be. You're really looking, or you get like pockets of areas that are really interesting for most people, but in terms of percentage levels and measuring price in terms of percentage using fibs, you're looking for confluence. And I'll leave you with this. From the bear market structure, most of you have seen this if you watch my videos. From a bear market Fibonacci pull, you'll see that we hit a major level, and the 100% of this, is the $69,000 level to the $15,500 area. And I've shown this on my videos, but we hit a major macro fib level that was confluent with some lower term time frame volatility levels of interest as well. in between the daily and weekly there, coming in right around this 103,650 or so, 645 in this case for a spot price on Coinbase. But it's a macro Fibonacci level, so we're 27.2% above the $69,000 high relative to that structure between 69,000 and 15.5. So it does the math for us to tell us what the percentage values are above price on an extension like this, hitting a major level. Once it gets through there, we're looking at the next major level. But that 1414, which is at 128, and I still give it some slush, 128 to 130. And in this case, the 103,645, we saw $104,000 tagged even, right? That's just where the orders came in. But price is being tracked by humans. They're using all of these tools, and the algos use all of these tools, and the market makers use all of these tools, and the market manipulators use all of these tools, along with the fundamental underlying aspects of Bitcoin as an asset and anything else to determine where they're going to place their orders. So, and we will see the etchings of what is to come play out on the chart before people are like, well, it turns out so-and-so sold, and that's the news, right? Like, or Michael Saylor bought. Well, somebody was selling to him if he bought, right? So, why is he always marking the highs when he buys? Because somebody's got to sell, and other people will take the opportunity to sell on the back of that as well, especially when we're in an environment like we are, where we've been tracking this live the entire time. We knew to look for corrections if criteria was met, even right down to the lower term timeframes. And that's something that we're going to get into a little bit more next week. So, Peace, how you feeling? You overwhelmed yet?
What's that?
I said, you feeling overwhelmed, or did this all make sense?
No, this all makes sense. It actually makes a lot of sense. I love the Fibonacci stuff, and especially the golden ratio piece of it. It almost kind of like is the algorithm of the universe to a lot. That's why it's applied this way, and that's why it actually ends up working.
Yeah, but here's what I'm going to tell you. Here's the danger of the golden ratio. Is I can pull a fib from anywhere on this chart, and I can make this area the golden ratio.
Right. You can just keep stretching it until it fits.
Yeah, until it fits. I can find the price action swings that will make it fit.
Right. You got to follow all the other rules. It's not just putting a fib on there wherever you feel like it. And
yeah.
And
well, even in the context of that, I could still I would still say that there's ways in which I could find 618s and confluent areas of interest. It's how do you utilize that information, right?
So GTSC is actually talking a little bit over my head a little bit, but I think you'll understand. He says, was the 706 and 786 golden pocket covered?
No, and that's not the true golden pocket. I hate that guy's out there. There's a few guys that do that with fibs, and I just despise it. No, that is not actually the golden pocket. Nor, look, I'm going to do some myth busting, because there's a lot of like TA quote unquote TA experts out there that are full of shit. Yes, they're coming up with a system that in which they say works, and they're like, well, the so and so wrote it in their book, and that's why I'm using it here. And it's like, well, the guy that wrote that book was also a terrible trader, so good job. And his theories have been debunked over the years. Like, there is other golden pockets that you can use. Is the 706 to 786 one of them? No, because it's not a 618 based golden pocket. You can get the sniper pockets, and that's more of like a sniper pocket. And like all this other stuff. And I actually kind of hate that people put that out there, because it overcomplicates price action for many people. Like, well, now I got to wait for this to put in my trade, and like this is where I'm going to take my profits. And it's like you're not managing risk at that point. You are you're trading in a manner, in most cases, even if the system that's being presented to trade with this kind of stuff like that, in most cases, it is a like marketing piece for them to sell you a course in a lot of cases. And then not, they know that even if they tell you to risk manage and how to risk manage, that most people won't. It's all just a framework to sell you a course that usually is not going to be to your benefit if you don't understand how price action works and why it works the way it does, which is the keys that I'm trying to build out for everyone here through this series. And Landy is known for his Landy rants when it comes to some of these more popular TA quote unquote experts out there. I used to do an entire series called Landy Rants where I would absolutely rip them apart, because I do not like that what they're doing gets 90% of their audience wrecked or more, and then they're selling courses to get them wrecked. So they're taking your money to teach you how to get absolutely destroyed, and they don't really care at the end of the day because they took your money already. Which also tells me that, and that doesn't mean this applies to all of them, by the way. It's just most of them. But there are good educators and trading groups out there that do a damn good job and work really hard and do really good TA, do really good trading sessions and live trading sessions, and will talk you through trades and mentor you and all that. Those groups are great. I actually know a few of those groups who are really good, but it's not like, here $500, here's your course, or here's $2,000, here's your course. No, it's usually a bigger buy-in for those courses. And and those are very, very exclusive groups where you are there grinding every single day with them, and they're grinding with you. And they're few and far between. There's not many of them.
No, well, I mean, and that's, I paid for some TA course with Bill Stenzel. Johnny Bravo is his YouTube character. And it's entertaining. It's fun, watching him and stuff. And there was some interesting information in the courses, and some of it was some of the stuff you're teaching, but it wasn't anywhere near as clear or thorough, and he has his bear market course and his bull market course, or his swing trading course and his bear market course and his crypto course. And then he also, he's selling this thing, and you can make money on Amazon. Right. He's just selling courses. Right.
And for some people, they will take enough out of that to become proficient traders. I will tell you, in aggregate, most will not. Because most of the people that sell courses don't come from a background in technical analysis, likely aren't, certified charting technicians or FINRA, licensed guys, or people who've spent time at trading desks at in firms that provide liquidity and stuff like that. It's very few and far between that you find those guys, because most of those guys are still working, that get into this side of things. So there's very few of those guys in crypto, and there's a lot of quote unquote TA guys in crypto. And most of the TA guys in crypto give technical analysis a really, really, really bad name. And it's because they engagement farm. They engagement farm with trading setups, with simple lines on chart that kind of oversimplify, with hyperbolic takes like, this is a really bullish setup, this is a really bearish setup. When in reality, if you're trading, you don't care if it's bullish or bearish. You're moving with price. And you're trading the volatility in price action. So it doesn't matter if it's bullish or bearish. You're trading the move, or the dispersion of returns, the open to the close, the high to the low to the high. that's all you care about is that volatility. And that's where, I kind of brand myself as a volatility trader, because I trade volatility, because in a low volatility environment, you're going to get a lower dispersion of returns. Therefore, what people do in crypto markets like this during a consolidation or compression period, what do? They turn up their leverage, because they're not making as much gains, because price, although it's still highly volatile, it's switching around direction. So it's getting that limited volatility periods of time to the upside and downside. So they're constantly having to adjust. And we don't have as wide of a dispersion of returns as we would when Bitcoin is running to the upside or running to the downside on expansion, right? Where you can sit in a trade. It can be lower leverage or higher leverage. We'll get into how you can swing trade versus scalp trade. What does that mean? How most, a good scalp trade in a low volatility environment, when things begin to break out, is where we could say, like, we could turn that scalp into a swing. Excuse me, or that scalp becomes a swing trade, right? So that is kind of like the basis of that kind of stuff. And we're going to cover all this stuff. Like, it's gonna be a chore for those that aren't keeping up with the recordings to get where we are even today, right? 5 weeks in, couple hours to maybe 2 hour live stream sessions. It's not easy to keep up, but at the same time, it is easy if you're really interested in this stuff.
Right, the information's there.
It's like 4 to 6 hours, and you can catch up to where we are. I do suggest for those of you that are coming in like today, that you go back and you look at.
They can even watch it on 1.5 or 2x speed, and then the spots that they need to slow down too. You don't.
Yeah.
It's not an hour. It's not 2 hours to get through 2 hours worth of video if you're interested in the content.
Yeah, and also, I suggest, even if you think you got it down, go back and rewatch. But what I'm trying to do is weave it all in together so that we're covering the concepts over and over and over again to really drill it into your skulls, against your will in most cases. Like, I tuned in just to see peace, and here's Landy talking about charts again. Damn it. But
I don't ever think that that's actually the case.
I hope not. I see we had a decent turnout today. But as you can tell, Landy is starting to feel the sickness set in. And
yeah, I got. We're ready to wrap it up. Always a pleasure, man. I could talk to you all day, but I know you're not feeling well. I gotta go pick up my daughter in like 20 minutes so. So I have a little bit of time, but I'm not looking to stretch it all out. I think this was a great show. I love the series. I love how you explain things and how the depth of knowledge that you're able to convey. So I really appreciate that. And I really hope that the little guy's feeling better, and that some of your symptoms are psychosomatic and you're not really getting sick. Maybe.
I hope I hope that's what it is. But we shall see. And I want to, of course, thank you again for having me on. As always, Peace. It's always a pleasure. I want to thank everybody in the audience that showed up today, everybody that shared and liked the posts. I do encourage, again, everyone to go back and watch the other videos as well, to kind of catch up if you're just kind of coming in now fresh. I had to work in your sock token. But, we're going to keep this.
I almost missed it. That's how there's so much to track these days. It's insane. There's too many.
But, yeah. We're going to put in the work. We're going to, this is proof of work. You're going from being fresh to getting a little moist.
That's it. And rinse and repeat.
Yeah, and change your socks, everybody. But yeah, thank you so much, Peace. It's always a pleasure. It's great seeing you today and great talking to you about this this passion of mine.
Thank you, Landy. You provide great content. We'll have to keep doing it. But thank you so much for coming out. I do hope little guy feels better. And I am Peace Love Music. We are DeOrganized Media, coming at you live in partnership with Bitcoin Live Decentralized Broadcasting, bringing you all the content we can muster to provide value to our viewers and our audience and help inform our ecosystem. Thank you all for tuning in today. Y'all have a blessed rest of your evening, and tune into the Art on Stack Space if it's still going on with Good Kitty and Reese and Nieta. And we'll catch you tomorrow morning on the Good Morning Show. Peace out.